Is no restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
Yeah, the narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump
administration.
Hi, 𝗬𝗍𝗿. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends, welcome to another live stream. Right, I want to show you guys where I longed, where I shorted today. I was here stuffing around on the 15-second time frame, on the 30-second time frame, 2 successful trades in the bag, and now I'm in another trade. Right, there was the one trade, there was the other trade, you know, just roping in the trades here on the week's exchange. Ooh, what a difficult range to trade over here, right? I was having so much fun with this little range over here. I was having a blast of a time. But trading the low time frames, when you start delving into the 15-second, 30-second, 1-minute time frame and scalping these little scenarios here to the up and to the downside, ooh, it does put strain on your eyes. You have to be focused. You have to have that powerful music playing in the background, right? You need to be sniper. You need to get in. You need to get out as quickly as possible. You need to take your profits and not worry about price or the next move potentially, because or how far or how low it's going to go depending on where you've taken profits, because it's about a successful trade. And now, right, legends, I have attempted another trade here at the 1.618 because I just love the 1.618. My position is already protected. My stop was below the low. Now I'm protected, and I've already taken some profits. When you start hitting resistance, you take profits, right? When you start hitting resistance, you take some profits. So, legends, let's analyze the price of Bitcoin here together. Remember to smash up the like on your way in. I will explain to you in detail how I got into 2 epic trades now in my 3rd trade, and literally in the last 30 minutes, hour, 3 trades, okay, in 30 minutes to an hour, right? All profitable so far. I mean, it takes some how can I say it? It takes some focus. Okay, you have to, you have to be sniper. You have to get in with good risk management and take advantage of the moves here to the up and to the downside. So I will zoom into the smaller time frame, and from an education perspective, explain to you, well, how did I get into these trades to the up and to the downside? Because I mean, that was the trade that I wanted to get into, and I missed it. I'm busy with other stuff, right? And we got nice momentum here to the upside. And then, right? Dare I even go into the 30-second, 15-second time frame? Dare I even go into those time frames and show everyone how I got into those trades? Hi, Andy. To Dewald, Legends, Crypto Flop, welcome to the live stream. Smoking socks all night long. Good evening, Dewald. Morgan, welcome to the live stream. Ray, Rave, Van Dewald, happy Friday, Zamalek charts time, right? Was these trades shared with the pro community? No, because they happen too quickly. By the time I type out the message, the trade is played out. When you snipe and when you scalp, the 30 seconds, 15-minute time frames, it happens too quickly. So there's no ways I'm able to share those type of trades. A 15-minute, 1 hour type of trade, no problem, because it takes longer to to play out on the larger time frames. But when I'm scalping, okay, 1 minute and 30-second time frames, there's no time to post those trades. But because by the time you've posted it, you're already past the entry price. You're increasing you're applying too much risk to the trade, and you're potentially already hitting profit taking areas. So it's really not feasible to post fast moving trades like that inside of a community. Right, legends. Let's go shout out to Mr. Aiden for the SFP setup. Yes, Mr. Aiden has been crushing it inside of Discord, one of our moderators and coaches inside of our pro community. If you guys like to join our Legends Pro community, okay, let's open up this video over here. Down in the description, you select more, you zoom in, and there we have it. There we have it, right? That is where we have 4 or 5 people providing trading setups, education, helping the community. We have a bunch of mods in there, very skilled and knowledgeable about how technical analysis works, daily levels, weekly levels, point of controls, how to exercise great risk management. Because the one thing that myself and Andy pride ourselves in is that we preach exceptional good risk management, and we also focus on market psychology with that little, you've got the green monster, the greed monster sitting on this side, and you've got the fear monster sitting on the other side of the shoulder, and that is something that we heavily focus on. I want to see if I still have that picture. This is something that I want to show everyone. And right, let me drag this into the screen and show everyone. Okay, right, this is successful trading in a nutshell. Okay, and you can think about this diamond as an iceberg as well, right? Technical analysis is such a small part of what makes you a successful trader. Risk management is far more important, and that is what myself and Andy hammer on, right? And psychology, your mindset in terms of taking profits at resistance or support, longing where you're supposed to be longing, exercising good risk management, because technical analysis actually plays the smallest part. Where most people get it wrong, they think that you need to be a brilliant technical analyst, okay? And then they forget to pay attention to these two, which is the biggest part of making you a successful day trader. Right, legends. Remember also weeks, still not for limited time only. Like I said, this deal is not going to last forever, legends. For a limited time only, you get free $100 by signing up and linking your email or your cell phone number. Right? All you need is an email and a password to sign up to 30K bonus. Money gets airdropped into your account, and you also get 50% discount on your trading fees. And this is an absolutely amazing deal, which is not going to last forever. And right, also, you can get another extra $100 if you do have an additional $200 to transfer into your features account. You don't even have to trade with that money. You leave it there for 1 day, you get another $100. So then you have $200 to trade with. Right. Okay, cool, legends. I am currently in a long over here. Like I said, I played a long over there and I played a short over here. So what I want to do is, before we go and look at the larger time frame and so forth, and while it's still fresh in my mind because I took these trades, let me put some background music on here. Right, there we go. There we go. There we go. There we go. Right, legends. Let me zoom in. Let me entertain you, okay, and go to the 30-second time frame. And I want to explain to everyone how come, okay? Because when you look at this little structure, over here, okay, and you zoom out onto a 15-minute time frame, and I put it into perspective, okay, I have made significant gains with that little structure key over there. And I think the mindset that most people need to change from a trading perspective, but I know you guys are clued up, okay? I'm talking about the new people that are very new to trading. Maybe you haven't even placed a trade yet. The mindset that needs changing is that me being in the game for a very long time, right, know that I can make significant gains over there. Okay. beautiful gains, even for the whole week, where I don't even have to place a trade for the entire week because I've made enough gains in that little move. The mindset that most people have to change is most people think that when they catch a low, it's going to do that. That's the greed kicking in. It starts hitting resistance to the upside. It taps the 786. It claims the high, for example, and then it falls down. You get stopped out. Okay. Or when they catch a swing failure pattern at the high, they nail that entry. They got their stop loss. They think, okay, it's going to go down to $85,000. It's never the trade. Okay. It's never the trade. You might get lucky where a day trade turns into a swing trade, and that usually happens after I've already taken profits and I've left some of the position open. That position that I leave open for higher or lower levels, depending on whether I'm longing or shorting, that is what becomes the swing trade that I leave in for days. That potentially comes and claims the low, but boy oh boy, if I had to catch a swing failure pattern here and I've already taken aggressive profits here to the downside as we're hitting support, if price had to come down there, that's most probably where I'll close the position. Even that little moon back, I'll close it because you're hitting support. Okay, you take profits by the lows and you short the highs. You long the bottom and you take profits by the highs. That is how you trade. Okay, cool, legends. So now let me take all the scribble here out the way. Let me go back here onto the 30-second time frame, and let's see if I still remember what I did over here. So legends, first trade that I took here on the 30-second time frame, let me zoom into this structure. Okay, was, let me see if I have it. Where's it? Where can it like to be? Now I need to find, because sometimes when I put on these screenshots, they disappear. Sorry, legends. Let me go back onto the 5-minute time frame. Let me just get that screenshot in the picture. There we go. Yes, this was the first trade that I took to the upside. So let me go back onto the 1 minute. Let me just see if the picture stays there. Let's go to the 30-second. Okay, not losing the picture because I need the picture to show you guys where I entered, how I entered, what was my technical analysis, because I love to educate. This is what the channel is about. It's about educating. Okay, legends, like I said, I missed this long, okay, with this nice little momentum here to the upside. But fear not, I know that there's a retracement, okay? Where did I get in? Somewhere in this zone. I didn't snipe the bottom. I wanted to. I was a little bit late. But what I was looking at over here, I wanted to see if this move is impulsive. And on the 1 minute and even here on the 30-second time frame, I could not see if it's an impulsive move. So what I did is I went on to, I think, the 10-second time frame. Okay, and this is where the magic happened. Where's that 10-second time frame? Right. Okay, right. There's the structure. Let me show you guys. This is what I was looking at. So I saw 1, 2, 1, 2, 3, 4, 5, 4, 5. So it looked impulsive on the smaller time frame, which I then knew, okay, this is most likely a corrective structure. So what I then did is, let's go back onto the 30-second time frame, and I can show you guys how I played this out, is that I then went, okay, and I said, right, if this is a impulse, now I know on the smaller time frame I can count 5 waves here to the upside. If this is a corrective structure, okay, you take your trend base fib from the high to the low to the high, because now I'm speculating on an A, B, C to the downside, and it tapped the 1-to-1 extension where it got a reaction, and then it actually, I didn't pull the fib 100% correct over here. There's actually the fib pull, right? We tapped the 1.236 to perfection. That little candle happened so fast, I missed out on it, because I knew if this is impulsive and this is a 3-wave corrective structure, we're most likely going to find support at the 1-to-1 extension or the 1.236. Okay, what I then also did is I took a Fibonacci, a normal fib retracement from the low to the high to see that, well, do I have confluence with any of those levels? Okay, so the 618 had confluence. The 0.618 had confluence with a 1-to-1 extension. The 1.236 had perfect confluence with a 786. This little move here happened so quick I couldn't jump in fast enough. Okay, like literally I couldn't jump in fast enough, and I jumped in over here. This is where I got in. Literally at the 1-to-1 extension. Because if this is impulsive and this is corrective, guess what? I know that we are going to move higher and most likely even tap the 1.618. Okay, so this is where I got in. This is where I put my stop loss. And as soon as price started moving here aggressively in profits, I protected my position. I actually had my stop loss above my entry so that if I get stopped out, I get stopped out with no loss. And it even covers, you know, and it covers the fees as well. So I don't even have to pay fees if I get stopped out. And then what I did is to say that, okay, now I need to take, I need to quickly go and work out my profit taking area. The obvious profit taking area is claiming the highs, because as soon as you hit resistance, you pay yourself. But I knew that if this is impulsive and this is corrective in a 1, 2, 3 or an A, B, C, okay, then what I did is I took my trend-based fib, cleaned this up, right? This is how I scalped the crap out of this scenario. Took my trend-based fib from the low to the high to the low, and guess what? Where we got the reaction at the 1.618. So I entered right around about this zone. This is where I entered right about 6640. 6640, round about this zone is where I entered, and then I took profits at 97327, 97327. Right. There's a little bit of slippage as well, but that's where I took profits. Okay, more or less at the 1.618. Right, I did not care if price is going higher. Okay, I didn't care if price is going higher, because now this can be a 1, 2, 3, 4, 5. Or it can be an A, B, C. So closed my position, took my profits, and 28% trade in the bag. Beautiful, okay? Then what did I do? I didn't stop there. No. I didn't stop there, right? Then I took okay, that screenshot doesn't want to, I'm not going to zoom out again to find that screenshot, but I did show you guys the trade. What did I do? I zoomed into the larger time frame on the 15-minute time frame, and I was just like, okay, there's the trade, right? There's the trade. I then zoomed into the larger time frame, take the scribble here out the way, and I wanted to see if this zone, okay, has confluence with any of these levels from a Fibonacci perspective. And then what I did is I took my trend base, my Fib retracement from the high to the low. And boy, oh boy, look at that beautiful 786 tap over there, right? Look at that beautiful 786 tap together here with the 1.618, the 786, and my entry was at 97,460. 97,460. There was my entry, right? I used the 786 line as a SFP line. I put my stop loss above the high, and as soon as we started falling down, okay, I protected my position, because I'm a very defensive trader, because I know that the market is designed to take my money, not to give me money. It's designed to take it, so I have to protect my capital. I got out at 97,100. Now you might be asking yourself, Dewald, why did you get out? Because, okay, this is why I got out of the trade. When I now zoom back onto the 1-minute time frame and I take a Fibonacci from the low of 2 to the high that we've made, I know, okay, and this is where Elliott wave theory is also very powerful. I know that if this is a 1, 2, 3, 4, 5, the 50% Fibonacci is a maximum 4th wave target. And you can see that we got an initial reaction there where we got the bounce and I got out. That trade was still a successful trade. I got out because we hit support. Right, so long, short, got out. Where did I long now? Just before the live stream? My position is already protected. I actually moved my stop loss now just above my entry. Why did I long over here? So longed over here, shorted over here, and what I'm also trying to highlight over here, legends, is I, as a day trader, I don't care if price falls further. Yes, I do sometimes like to keep some of the position open, okay, for lower levels, but I just wanted to show everyone that I don't care, right? It was still a significant trade to make profits. The stop loss was phenomenal, right? Let me paint this out for you guys. There was my short. There was my stop loss, literally glued to the low, and I took profits at the 50% Fibonacci. Okay, that is a 4.2 risk to reward. As soon as price fell down, I immediately protected my position, which became a free trade. Okay, you can make significant gains with a small little move like that with a little bit of leverage. Okay, that stop loss also, by the way, let me just undo to get that stop loss back, right? That stop loss was 0.1% away, which means even on a 200x leveraged position, I will not get liquidated. I will get stopped out. And I did release a short this morning where I told everyone leverage does not matter. I think, you know, I see people freaking out when they see someone post a P&L shot and there's 200x leverage or there's 40x leverage like I've got over here, where people are like, yo, you use so much leverage. Leverage doesn't matter. What if the person used what if the person used 0.5% of his portfolio at 200x leverage? Okay, leverage becomes dangerous when you apply high leverage to your entire account when you place trades. That is when leverage becomes dangerous. But when you are, whether you're trading with 1% of your capital at 200x leverage or 100% of your capital at 10x leverage, it's exactly the same position size. Okay. Right, legends. Now we're currently getting the move here to the upside. Let me see how is the trade doing here. You know, I just need to pay myself on the way up because that's what I like to do. I pay myself on the way up. Currently 12% in profit at the moment. So I'm going to let this one ride out a little bit more. Right, legends. So the rest is history. Let me go through some comments. So I just wanted to quickly explain why I got into these trades, and if you can master your technical analysis on the smaller time frames and you can specifically, okay, tame those emotions and be robotic about your trades like I've just done here today before the live stream. Okay, I was trading like a crazy maniac over here in this little structure, crazy little maniac, and I've made so far 3 successful trades just from this move over here, right? Using Fibonacci level, Fib retracements, probabilities, taking profits at support from my shorts, and now I am in a long position over here. And the long position, I mean, pretty straightforward, right? Well, for me at least, but this is why I'm educating everyone. If I go here onto the 5-minute time frame, what I was looking at is to say that, well, if this is the high, and this is a corrective structure, okay, simple thing to do for me, even if you don't know Elliott wave theory, you take your Fib from the high to the low to the high. We tapped the 1.618. Bam. Beautiful 1.618 tap over there, right? I just want to see if I measured that correctly. No, I measured it incorrectly. Wait, it actually looks better than that, right? It's from the high to the low to the high. And I know how magical these 1.618 levels are, right? So that is where I longed with my stop below the low, and now my stop loss is above, right? And I've already taken profits as we're hitting resistance here. I don't care if price moves higher. I don't care if price moves higher. I need to pay myself as a day trader. It's about scraping those little bit of profits from the market that keeps you consistently profitable. Okay, right, legends, let's go through some comments. These are basically the 3 trades that I have taken so far. we can now go back onto the larger time frames, which is my favorite time frame. Take this all out the way. And remember, you know, I've now even noticed, even with small little scalp trades like I've just done, that 50% discount on your trading fees makes scalping worth it. It really makes the scalping worth it, okay? If you're trading on an exchange with high trading fees, and you playing high leverage, small positions here to the up and to the downside, it's sometimes not even worth it because the fees eats so much into the profits that it's not even worth taking these small little trades. So using an exchange like 𝗖𝗍 or Weeks really maximizes the profits into your account. Especially if you are a scalper. If you like scalping here on the 5-minute, 1-minute time frame like I've done here today, okay? Using an exchange with low trading fees really helps, okay? If you're playing larger moves on the 15-minute, 1-hour time frame, then it doesn't really matter, okay? Then, yeah, it doesn't matter. But if you're scalping like I did today, yeah, you need to use an exchange that has low trading fees. Otherwise, it doesn't make the trades worth it. Even if you win the trades, like then it feels like you're just trading for fees, okay, to pay the fees. Okay, right. Yes, scoping on Bluffin is pointless. Yeah, I do know Bluffin's trading fees are a little bit pricey. I don't do any scalping on Bluffin personally, but I do 15-minute and 1-hour trades on Bluffin very successfully, okay, because that covers the fees plus way more profits, okay. The larger the time frame, the bigger the profits. It doesn't matter if you have higher trading fees. But if you're a scalper, okay, if you're a 5-minute, 1-minute scalper, you need to trade on 𝗖𝗍 and Weeks. And I do have links for both down in the description. Okay, I don't often talk about 𝗖𝗍 because people don't want to verify for some reason. But 𝗖𝗍, there's the link, right? 20% deposit bonus. And then I've also got Bluffin over here, and then Weeks, right? This is where I did the trades today because you get 50% discount on your trading fees. And I believe I actually get a little bit more because I bought WXT tokens, which is the native token of Weeks. And the more tokens you own, you even get further discount on your trading fees. So I do own WXT tokens, which actually brings my trading fees down a little bit more. So if you want to take advantage of the WXT tokens, it's completely up to you. I have no affiliation or do not benefit in any way by you buying WXT tokens. No financial advice. You buy at your own risk. Okay, I just bought the native tokens over here because it does unlock more lower trading fees and other additional benefits that you can take advantage of from Weeks. Okay, so I bought some WXT tokens, not from an investment perspective, just to unlock more benefits on Weeks. Right, cool, legends. Now, let's go through some more comments. Dewald, please link TA today. Yes, we can go and look at link. Scalping, yes. Scoping. How do you know when to use the FIB extensions? It's not a matter of knowing when to use them. It's a matter of knowing. I use them all the time with every little structure that I see. I often use them. I'm not sure how to answer that question, but I used to trade with FIB extensions before I even knew Elliott wave theory. A lot of people get it confused. They're like, yeah, Dewald, it's because you know Elliott wave theory that you trade with FIB extensions. No, remember, a FIB extension, okay, for those of you that don't know what the difference is, a trend-based FIB extension shows you where price can go when you measure like a wave. Yeah, if you measure that wave and you want to know where can the next wave go, it shows you where the next wave can extend to, hence the name FIB extension. Okay, that is why it's called a FIB extension. The meaning of the FIB is inside of the name. So if I, for example, look at this wave, and I can see maybe some bullish momentum over here, and it's building up a new wave, I can use this wave to determine how high that wave can go. That is why I use FIB extensions, because it also helps me to take profits, and it helps me to build up confluences at daily levels, and is especially the most powerful tool that you can use when price is in price discovery. Okay, if Bitcoin had to take the all-time high once again, okay, this is how I have known where to short when you hit tops, okay, is because I've used my FIB extension. When Bitcoin goes into price discovery, often people do not know where resistance is going to be because there's no price action above. There's no daily levels. There's no naked point of controls. There's no price action to determine where the resistance is above, and that is where your fib extension becomes very powerful. So it is definitely a tool that you need to learn to master. I highly recommend it, especially if you're playing a meme coin or an altcoin that goes into price discovery. The only tool that you know where potentially the next wave can go to and basically find rejection is using your fib extension. So if I, for example, look at this structure over here, let's say this is a bullish structure, and it's going to build up a wave and it's going to continue here to the upside. I can go and use my fib extension from the low to the high to the low, and now I have some targets, and the targets does come with a lot of experience. Your default settings on your fib extension is shit. Okay, I have backtested these levels. These are the levels that you need on your fib extension. If you want to know what the settings are, here you go, take a screenshot. Right, there's my settings for my fib extension to get the lines and the numbers exactly like I have them. Right, so then I know if this is an impulse, whether this is a 1, 2, 3, or whether this is an ABC, okay, I have levels. I have the 121, I have the 1.236. This is a common C wave target. If the wave extends to the 1.618, I know, okay, now it can be either a 3 or an extended C. If it comes back down and you take a fib from the low to the high and it retraces to the 382 50% Fibonacci and it finds bullish momentum back to the upside, I know that it can extend up to the 2. So when price is in price discovery, I know still where to take profits or to take shorting opportunities. So very powerful tool. I hope I've answered your question to some degree. Right, let's go down here. Don't be disgenerous. Market orders are cheaper on Bluffin than weeks. Right, sure, limit orders are free, but you can't scalp 1 minute with limit orders. No, you can't, Alex. I agree with you. When you scalp, it's market execution. Okay. Excuse me. Right. And yes, I mean, it's cheaper than on weeks. Right. Well, it depends on how much trading fee discount you have. Okay. Maybe because I have the WXT tokens, for me, it's worth it. But right, I have not really done any scalping per se on the 5 minute, 1 minute, 30-second time frames on Bluffin. Just as yet, but I have I have noticed that the fee structure is very similar to Bybit, maybe a little bit cheaper than Bybit. Right. Anywho, I'll practice it for sure. Thank you, Dewald. Goes Levi. Absolute pleasure, man. Did say invalidated bullish structure. Or we can go look at say, we're just going to first do some TA here on Bitcoin, and then we can go and look at some altcoins as well. Tadas, I see you. Okay, let me flag your comment over here, then I can go and look at it. Say, I will flag over here. So just remind me to go back to the flag comments, and then I will remember to do TA on say and on link so far. Right, cool. Thanks. Absolute pleasure, man. Okay. Cool, legends. Let's dive into some more technical analysis, right? So let's go on to the 15-minute time frame and see, well, what are the probabilities at the moment? Okay, currently getting a pump back to the upside. Okay, currently getting the pump back to the upside. How is my trade doing? Actually very well. Right, 25% in profit at the moment. Yeah, I mean, those 1.618 levels are so powerful. Right, those levels are powerful. Anyways, legends, so for me, it is about creating a plan at certain levels. Okay, so where we got the rejection, and this is the fib retracement. Okay, this is not the fib extension, and then the meaning is in the name. When you have a high and you have a low, now you want to see where price can retrace to, or where it has retraced to already. Okay, this is why this is called a fib retracement. It does have extension targets, but I hardly use the extension targets on the fib retracement. I love to use the fib extension for that. Right, legends. So we have rejected by the 786, and if we are I wanted to say if we are going to form bearish CVD, there's a chance that we could form a 1, 2, 3, 4, 5 here to the downside. Okay, but I don't see any weakness in CVD just as yet. 1, 2, 1, 2. It looks like it's building up 1, 2, 1, 2. Okay, let's see how this plays out. Right. So this was a shorting zone that I did want to highlight here on the stream, and now it played out before I could highlight it. It literally happened a couple of minutes before the live stream, and right, got the momentum very fast to the downside, and now we are finding upwards momentum. Okay, so looking at this structure, legends, okay, I have as a good technical analyst, okay, I have to have a trading plan below and I have to have a trading plan above. If price moves up and it hits certain levels, I can make a shorting decision. If price moves down and it hits certain levels, I can make a longing decision. It really is as simple as that. Okay, so depending, no one knows where the price is going to go. The reason I like Elliott wave theory is because it's the best predictive tool that we do have in the market. Okay, but even with Elliott wave theory, there are often a bullish and a bearish case scenario. And then you as a technical analyst, depending on which levels gets hit and invalidated, it will either invalidate the bullish scenario or it will invalidate the bearish scenario. Then you know, okay, now I have directional bias. If you invalidate the bearish scenario because you hit a FIP level that invalidates that scenario, for example, then you know, okay, now the bullish case scenario kicks in and now you know where to look for longs. That is why I love Elliott wave theory, and that is why I got so interested in Elliott wave theory, and because it's just interesting as hell, right? It's just very, very interesting. So what I would now like to do is to build a trading plan at the bottom and a trading plan above. Okay, so that's just what we do as technical traders, right? AR, alarm going off here. Looks like it wants to break out. I saw 𝗖𝗂𝗿𝗫 I had a couple of alarms going off this morning here on 𝗖𝗂𝗿𝗫. Oh, as per the thumbnail, okay, some alts looks like it wants to show strength here to the upside. 𝗖𝗂𝗿𝗫 broke this trend long ago. That is where I got into 𝗖𝗂𝗿𝗫. Okay, I have already taken profits by the highs, and I left a small little moon bag open, and depending on what's going to happen over here, I might build another position depending on what's going to happen over there. But so far it shows some promising price action. Okay, I want to see some more high time frame candles. You know, this is the 4 hour. I would like to see a daily candle close above that trend. Okay, call me, because I know that the potential long to the upside could be epic, so I'm going to be patient over here. I'm going to be a little bit patient over here, because I know, okay, once you break the bigger trend here on 𝗖𝗂𝗿𝗫, this trend, it's going to accelerate to the upside. So my plan here is to build a position depending on the price action that I see, so that I don't have to worry about this breakout. And then I could potentially just let price break out and have a protected position here at the bottom. Basically a free trade to the upside, because if you play the breakout over here, you're exposing yourself to risk. I would rather try and expose myself to risk over here while the structure is still small, because I think if it's going to break this trend, it's going to accelerate here to the upside, and you're going to expose yourself to a lot of risk if you try and FOMO into this trade. Okay, so for me, it's easier to build a position here because the risk management is better. If I do get stopped out, it's a smaller risk than FOMOing here into a trade and it turns around. Before it claims the high, it turns around and it, okay, that is a big stop loss, right? Depending on where you put your stop loss and how much leverage you apply, or whether it's a spot trade. Okay, cool. So I do see that 𝗖𝗂𝗿𝗫 is showing some signs of strength here above the trend, but I'm going to be a little bit more patient. AR, same thing, okay? I must be honest, the one thing that I would like to see here from AR, you all know, I have disclosed it. I had an entry down here. We tapped the 786. I added slightly to my position and it moved my entry just below the lows. and my stop loss is now above my entry. Almost got stopped out over here. Almost, but I'm still in the trade. So now I don't have to worry about this breakout because I have a protected position here. So what I would like to see, okay, is I would like to see AR claim this high. And you can see my resistance box here, my resistance boxes here to the upside. And what's also interesting about that resistance is if I take a fib retracement from the high to the low, look how beautifully those resistant boxes lines up with my Fibonacci levels. 382, 50%, 618. Beautiful resistance, okay, that lines up with fib levels. That's how I build confluence. Right, so what I would like to see from AR, I want to see a breakout, and I want AR to claim that high. I want it to smash the 382, because if it's going to reject by the 382 again and fall down, you could potentially form a double top and roll back down to come and claim the lows. And this is why I have a protected position here, okay? I don't mind getting stopped out and then looking maybe for another swing failure pattern to get back into the trade. Okay, but I want that high to be claimed. And the reason I want that high to be claimed is because I want AR to start changing market structure. It's not changing market structure yet. Very frustrating here from AR, okay? It is still a high, lower high, lower high, lower high, lower high, lower high, and we still have not claimed even this high. But that is the high that I would like to see claimed because of the low over there. So that is the high that needs to be claimed for me to turn bullish. Not these ones. I don't care about those two highs. I want that high to be claimed. If AR can find some strength and do this, maybe it rejects here by the rejection, then I'll be very interested in the retracement because you're starting to change market structure. You now have a higher high. It could come back down, make a higher low, and then continue, okay? If AR gives me what I want, I'm hoping that it's going to give me what I want. I want it to break out, make a higher high. And it can get punchy. Maybe it rejects here by the 618. Even better. Then you have nice little market structure change. Okay. And if it gives me what I want and it comes back down in a corrective fashion, in a three-wave structure, it has more volume to the upside and less volume here to the downside. This is where I will add to my position. Not as we are pumping. No, that's not what I do. If price continues to pump to the upside, then at least I still have this entry. Then it is what it is. I'm already in and I will just take advantage of the profits, pay myself on the way up. But if I can get my way, that's where I will add. Right, get a little bit more aggressive. Okay, cool. Legends, let's get back here onto the price of Bitcoin. Altcoins, let's go. Dewald, is ETH breaking out there? Yes, let's see. ETH is already broken out. Okay, beautiful retest. I was watching this yesterday like a hawk. I had an alarm on this trend. Okay, broke out and it came back for the retest. And I mean, it looked scary as hell. I didn't like the high time frame candle closes below the trend. Okay, I didn't like that, but then it got the bounce back outside of the trend. So it looks like this is actually a breakout, a retest, and perhaps it's going to start finding continuation. Okay, it didn't claim the high yet, which is, the high on ETH that needs to be claimed to start breaking local market structure is this high. Preferably even that high, because look at where the lowest point is. So I always look to the high to the left, okay, based on the lowest point of the structure. I don't care that ETH has broken this high. I don't care. It needs to break this high. Even better, this high over here. And it actually double topped from that high. It made a double top and it found a rejection back to the downside. So ETH needs to smash through. That retest is going to be very interesting for continuation. Because if I go here onto ETH, okay, and I know I'm analyzing the smaller time frames here. I'm jumping around between the 1 hour, 15 minute. But I mean, this is the zone. If you are bullish on ETH, and I can go and look at the ETH BTC chart as well. It actually looks pretty damn good. Okay, this is the breakout that you potentially want to get in over here before you get there, because it could come back up, reject. That's why, you know, it's better risk management to get into this move than trying to play this breakout, because it could fail. Right. Just like I've explained on 𝗬cie𝗂𝗿. So my strategy is always, okay, when you have a nice dump to the downside and you have a bigger trend, you're on the 4-hour, 8-hour time frame, I like to play my D-line strategies and my trend inside of the smaller time frames so that I can catch along before it gets to the main trend. Because one of the mistakes I kept on making in the previous bull cycle, for example, when I was still learning trading, is that I build my position here and my stop goes here below the low. Okay, spot. Let's say it's a spot entry, and then what happens is price doesn't claim the highs. Okay, doesn't claim the highs. It doesn't even claim that high, and it rolls over and it goes and it claims the low. And then I was like, no, there must be a better way to get into these trades. What if I, okay, play the smaller breakouts on the smaller time frames over here, build my position in this area before the breakout so that I don't have to stress about that breakout. And I don't have to have this insane risk management. Because I can tell you guys now, from a breakout trading perspective, if ETH had to find strength here and it breaks out, from a breakout trading perspective, you are supposed to put your stop loss below this low. That is an insane stop loss. Okay, that is a 33% stop loss. So I am trying to figure out, as a technical analyst, how can I expose myself to less risk, okay, before the breakout happens, so that I don't, number one, I don't have to care. Okay, maybe I can, you know, even this is what I like to do. When I build a position here and you come back up to the trend, I take profits already. Okay, if it breaks out, it starts claiming these highs, a nice proper breakout, and it comes back for retest, I will add back into my position, because I didn't have to stress about getting into this position. Now you play the breakout over here, it breaks out, it comes back for retest, now you're underwater. Okay, now you're underwater and you start stressing. You're like, no, you know, maybe you traded with too much money, you weren't prepared to take the knock, whatever your reasons are, and a lot of retail or dumb money, and I'm not calling anyone here dumb money, is that this is where the fear kicks in and people cash out their positions, and then it rock and rolls to the upside. Right. Cool, legends. I'm doing a little, it's Friday. We're taking it relaxed. I know you guys want BTC analysis. I will get to BTC, but I'm jumping around. It's Friday. It's relaxing. I do see the altcoins breaking out, so I'm giving them a little bit of attention here on the live stream as well. So let's get back here onto the price of Bitcoin. So legends, first point of order, taking a fib retracement from the high to the low, from the low to the high. Let's switch on some point of controls, daily levels, weekly levels. Let's see what we have cooking over here, right? Also, what I want to do is pull a fixed range profile from the low to where we are right now. Let's see where we are. Okay. Now we have some areas of confluence. So from a trading plan perspective, and I'm purposefully not going to go into Elliott wave theory just as yet. Purely from a levels perspective, okay, is we have a naked point of control that has not, a naked point of control that has not been tapped just as yet. And slightly below, we have the 0.618. I like it. If price had to find downwards momentum, it could potentially get a bounce in this zone. So I will use the naked point of control as an SFP line to get into a swing failure pattern. If price dips below, maybe it taps that 0.618, it can even go down lower, taps the value area low, and it starts trading back above. That's where I execute the long with my stop loss below the low. If price starts moving in my favor, I protect my position because I know that the market is there to take my money, not to give me money, right? And I pay myself as you hit resistance to the upside. So that is one trading plan or one trading level that I'm still keeping in mind if price does tumble here to the downside. because the one thing that I am still, okay, that could potentially still play out is, what if this is forming another wave here to the downside? What is this? What if this is forming another wave here to the downside? Okay, and then it gets momentum back to the upside, right? Because you now formed a lower high over here. The only time I will now turn bullish again is if price takes that high. Then, you know, you maintain, then you are still maintaining the high, the low, and if price then comes back down, you could form that higher low for continuation back to the upside. Right, so to the upside, it's not a beautiful short, but I mean, we do have a daily level. Yeah. Okay. If I take a fib from the high to the low, and if price moves up, I do know that the 0.88 gets usually a nice reaction. But when you tap the 0.88, you increase the probabilities of taking the high. But this is also a 0.88 tap from this high to the low. This is also a 0.88 tap, and look at how far price went to the downside. So yes, I will consider the daily level together with the 0.88. I have confidence over here. If price finds upwards momentum and I get the rejection with my stop above the high, I will look at this as a shorting opportunity. Okay. It really is as simple as that, right? Okay, now what I want to discuss is I want to zoom out ever so slightly a little bit more. And I want to look at this structure over here. So let me clean up the kitchen. And let's look at this entire structure on the 4-hour time frame. So, legends, I don't like that when you take a fib from the low to the high, I don't like this. Okay, don't like it. But I have to acknowledge that there's massive bullish CVD building up against these two pivots, of which the target is the high. There's also massive bullish CVD against these two pivots, and the target is this high. But maybe what's going to happen over here is, what if price just continues to range over here, okay, before we either get a move to the upside or we get a move to the downside? I do think that the probabilities of us continuing the range is higher than getting a breakout in the next week or two. I think we're going to still continue to range for at least 2 more weeks, if not 3. I think the range is going to continue here sideways. Right, but it's all, you know, it's all a game of probabilities, and there are 2 scenarios that I'm watching over years to say that, you know, I went and I counted this corrective structure. I actually had this, okay. There's the triangle structure over here, where you're forming a triangle, okay. A bull flag, if you will, because retail traders will look at this as a bull flag, where you could form that potential, okay, let's just keep it simple over here, where you could perform that A, B, C, D, E, and then you rock and roll to the upside. Bam. Okay, we continue the bull market to the upside. But this means that the range is still going to continue for a whole lot longer. Okay. And one of the structures that I also looked at is to say that, well, this looks, you know, you can count this as an A, B, C. Oh, sorry, that's the wrong one. Let's do A, B, C. A, B, C. Okay, A actually needs to be over there. Okay, B structure was very long. And now we are forming another A, B, C here to the upside to complete the B, and then we can form another A, B, C. Okay, and what that basically gives you is a W, X, Y, or an A, B, C, D, E, and then you continue momentum to the upside. So there is a scenario, and this is what I'm trying to highlight over here, there is a scenario for the bull market to continue without claiming the low. There is a scenario. Definitely on the cards. It does carry 50% probability together with a scenario where you can come and claim the lows. But I just want to highlight that there is a scenario where we keep on ranging, okay, making lower highs, higher lows inside of a flaggy situation over here, and we can continue the bull market to the upside without taking the low, even with the probability of the 0.88 tap over here when you take a fib from the low to the high. Okay, because remember, when I backtested the 0.88, like I've explained yesterday in my live stream, there is still a 30% chance that the 0.88 can give you bullish continuation. It's not to say that it has to take the low. There's still a chance. It's still a chance that it could keep on ranging and breaking out over here. Right? Don't really like this trend, to be honest. Don't really like that trend. I do think that, you know, if we are forming A, B, and we are going to create a C wave to the upside, I do think that the C wave is going to extend a little bit higher. So this is the zone that I also want to talk about, is that if I switch on my weekly levels, okay, daily levels, okay, let's just look at the weekly levels because they are the strongest. I like that pivot. That's the high of this structure. I like that pivot. We have a weekly level there, which is considered a strong level. And then I just want to see from a fib retracement perspective, if I take a trend base fib, sorry, not this one, extension from the high to the low. Oof. Okay, it's actually going to go higher. What if this happens, right? Maybe a little bit higher, like that, because you could form an A, B, C at the 1-to-1 extension, which is a common C wave target, together with the 1.236. This box, very common C wave target. Okay, I don't know how this trend is going to form, but now I can start building confluence, because if this is building up an A, B, C to the upside, and it's going to get aggressive here to the upside, there's the zone. Okay, so maybe we are going to find strength here above the weekly level. I do think there are some daily levels there, okay, that can offer resistance. But let me switch on another level. Okay, the 786 is also a C wave target. It's rare. It's not as common as this box, but I have seen C waves reject at the 786, which has perfect confluence with the weekly level and the high over here. So there's a chance that a C wave can come up here and fall down. Then you have an A, B, C, you create another A, B, C, okay? And the range just continues sideways in a corrective fashion. Right, so now I can take this out the way. And there's another structure, legends. There's another structure. This is the more aggressive structure to the downside, where we are potentially forming a WXY here to the downside. A W, this was the X here to the upside. Okay, you have an A, B, C in W. You have a three-wave structure in X, and now you have, okay, now you're potentially forming a C wave here to the downside. So if we miserably reject inside of this zone and we start falling down, okay, I would like to see one more leg here to the upside to create that three-wave structure, okay, A, B, C, okay. After your X, you get an A, B, C. I would like to see a three-wave structure. So I still expect upwards momentum before we move down, because you have to go and create the B to the upside. Okay, because remember, what is a WXY? A WXY, okay, and an ABC look exactly the same when I draw this. ABC, WXY. The only difference is an ABC is a straight structure. Right, let me actually just, that one is an ugly one. Let me do this. WXY, ABC. Okay, the difference between a WXY is that a WXY, if this is a WXY, has ABC, ABC, ABC. And this is just a normal ABC. That's one of those, is over here, where you just form a larger ABC. Okay, so what I'm looking at over here is exactly what I've just drawn. A, B, C in W, A, B, C in X, and A, B, C in Y, where we could potentially go down to that $85,000 area that we've been speaking about here on the live stream. Right, how many likes do we have here? How many likes? Want to just see. BTC reject every time from, just want to see. Dewald, BTC reject every time from the center of the parallel channel. Can you draw it by connecting the highs 110, 106, then the low 99K and 99.7? Okay, cool. Let's go. We can go check that out in a moment. Let me flag your comment over here so I don't forget. Elliot on the 1 week and month is telling us we are going down. Dean, right? I will show you what I see. Did my light die over here? Sorry, legends. There we go. Okay, I've been talking to you guys without my light being on. This is why my quality camera is so bad and I didn't even notice. Right, there we go. There we go. There we go. Dean, I will show you. I have gone through the Elliott wave scenarios yesterday in detail on the higher time frame, and I have explained the probabilities why I think we can at least still get one more high in the bearish case scenario. I've also explained in the extreme bullish case scenario where we are forming a potential double 1-2 year to the upside that could potentially even take us to $200,000, $300,000, and I've also explained the problems that I see with that structure. But it still has a probability. Not a high probability, but it still has a probability. Okay, so from a weekly and monthly time frame perspective, I still expect one more high. It's just, it is what it is. Okay, so looking at this structure, okay, you have to consider, right, when you say from an Elliott wave perspective, okay, and I've gone through this yesterday, so let me put this off. From an Elliott wave perspective, if you make a high, that is the highest point that we have currently on Bitcoin. In order to create a bear market to the downside, you have to see impulsive structures. Now you go and tell me, where's the impulsive structure inside of this structure? Okay, an impulsive structure is, where did we have an impulsive structure? Yeah, here's a beautiful one. Okay, here's an impulsive structure. Okay, 1 2 1 2 3 4 5 4 5. Okay, 1 2 1 2 3 4 5 4 5. That is an impulsive structure. Look at how it started. 1 2 1 2 1 2 3 4 5 4 5. That is an impulsive structure. After you make a low, okay, even this one over here, right? After you make a low, inside of that structure, there is 1, 2, 3, 4, 5. Impulsive structure, A, B, C. You continue to the upside. So when you make an ultimate low or when you make an ultimate high, like we've made over here, you now, from an Elliott wave perspective, okay, need to count an impulsive structure to the downside. And I can't. The only bearish structure that I'm potentially seeing play out here, okay, which carries lower probability, and this is what happened in this structure, okay, is a lot of people called for a bear market when we did this. An expanding structure is very rare in Elliott wave theory and should only be used once all other scenarios fail. When this structure played out during this range, everyone was saying, okay, it's a 1, 2, 3, 4, 5. We're going to make an ABC and the bear market is going to start to the downside. And what happened? We moved up because an expanding structure is very rare, never preferred unless all other scenarios fail. I've also gone yesterday and I've showed everyone when the bull market started and when the bear market started during 2021, we created impulsive structures. Okay, so for Bitcoin to fall and start a bear market, I'm not talking about just taking the low and finding, I'm not talking about that. That is not a bear market. That is grabbing liquidity and potentially moving back up again. So if Bitcoin is going to start a bear market here to the downside, I mean, legends, nothing's ever guaranteed. I'm just sharing with you what I'm seeing on the technicals. Now, you know, there's a problem over here. Right. Let's see. Now, you know, where's my trend? It's an expanding structure. It doesn't make any sense to me, okay? So, right, you have an extremely expanded structure, because maybe now this is your 1, 2, 3. Now it's forming 4, and it's going to make 5 here to the downside. Or 4 can even come up higher, and then 5. A, B, C, and then you continue down. So yes, it does have a probability, but a very low probability. What you would like to see after you make the all-time high is for 1, 2, 3, 4, 5. ABC, 1, 2. It needs to have an impulsive structure. This is not impulsive. This is expanding, which is rare. So if the rule states that this scenario should only be considered unless all other scenarios failed, then I'm going to say, well, the corrective structure carries higher probability. Let's take this out the way. This looks very 3 wavy so far. This looks 3 wavy. This looks 3 wavy. This looks 3 wavy. If we move up here, it's going to look 3 wavy. It looks very 3 wavy. It looks very corrective. It looks very choppy. It does not look impulsive. Okay, and I'm not saying that I'm right. All I'm trying to say over here is that a corrective structure carries higher probability based on the price action that I see over here. Okay, because if I go onto the daily, this is why everyone, I know it, this is why everyone's saying that the bull market is over. Okay, here's our little bull market. This is where we started the bull market, right over there. And yesterday I actually went into that structure and I showed everyone the bullish impulsive structure, a contracting diagonal to the upside, which is way more common than an expanding structure. Also, when we started the bear market over there, 1, 2, 3, 4, 5. Look at that impulse to the downside. Beautiful impulse to the downside. This was a 3-wave structure. 1, 2, 3. Where's 5? There was no 5. So if you have a 3-wave structure to the downside, you increase the probabilities of taking the high, which we did. Then we formed 1, 2, 3, 4, 5. 5-wave structure. Oh shit, we're going into a bear market. You make a lower high and you continue the momentum to the downside. You will know, you will know when we go into a bear market, it's going to crash aggressively to the downside. It's going to start invalidating levels very aggressively. But nonetheless, here's the scenario. Do I still have it here? There. Okay, let's put 5th wave there. This is why people are saying that the bull market is over. 1, 2, 3, 4, 5. Done. Okay, the problem is that I cannot count impulses there. That's the problem. Because if that's the end, like I've just explained now for the last 20 minutes, if that is the end, you need to count impulses back to the downside. You want to see 5-wave impulsive structures to the downside, or at least a contracting diagonal to the downside. And I'm struggling to count that. The only structure that I could potentially count is an expanding structure and should only be considered once all scenarios fail. So, which tells me that if this is the end, then maybe, just maybe, we're going to make one more high. This is the 0.618 target that I have at $128,000, right? Because now there's a couple of ways in which you can go and measure the 5th wave here to the upside. One way is you take your trend-based fib from the low of 1 to the high of 3 to the low of 4. Okay, and between, oops, the 1.236 and the 1.382 is a 5th wave target, and we haven't hit it just as yet. Okay, Also, where's the and the 0.618? Where's the 0.618? It's over here. We've actually exceeded it already, so I'm not even considering this target. I'm not considering this target or even the 1.618 above, $143,000. Another way to measure the fifth wave target to the upside is, and you know, this is now on the regular scale, and I mean, we have moved from the lows to the highs. We have already moved 600%, and usually when we move into hundreds of percents, I really like to use the logarithmic scale, because you guys have to remember that 1% at $96,000 versus 1% at $17,000 is very different in price. Okay, so it's actually better to go and measure your targets from a logarithmic perspective. Okay, so another way to measure your fifth wave target is from the top of 3 to the bottom of 4. You drag it across, you reverse it. Okay, I mean, there was your fifth wave box. Okay, so these targets just don't make sense anymore. That was a fifth wave target. We're above that already. But then when I go onto the log scale, this is where it becomes interesting. Okay. I need to see that low. Okay. From the low to the high to the low, reverse it. And okay, I didn't pull the fib properly, but this is why I have this target written out over here, because this is a common fifth wave target using the logarithmic scale, because we have moved up more than 100, or you know, we are 600% up from the lows to the highs already. Well, let me just, well, this is the logarithmic scale. Okay, so there's a chance that Bitcoin still makes one more high, then it completes the fifth wave and we fall down. And hopefully then, once it makes the high, we can start counting 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, ABC, you know, you get the point. You want to count impulses to the downside. Or at least double 1, 2s or something else, right? Lord, is there a chance that it's Alex, is there a chance that it's a 11112? I mean, it's a possibility, but then we're going to go into a super cycle, right? We are literally going to go into a super cycle. And I have, Alex, you ask a very interesting question, because I have thought about it, but I mean, it's just stupid to try and, you know, speak about a scenario like that. I mean, there's so much water that still needs to flow under the bridge. I know exactly what you're talking about, is to say that, well, here's the most bullish case scenario that I have. Okay, the problem with this scenario is that there's no volume kicking in over here. Volume is tapering down. This is why the scenario doesn't carry high probability, where we have a 1, 2, 1, 2, 3, 4, 5, 4, 5. And what you basically saying is, Dewald, what if it's a 1, 2, 1, 2, 1, 2, 3, like a god candle here to the upside? That will be a super cycle. Okay, it's going to blow everyone's socks off. But I mean, I just like to take it level to level before we talk about scenarios like that. Okay, yes, it has the chance. It really has the chance, because when you zoom into this structure, this is why I thought about it. Okay, when you zoom into this structure, you can clearly see that this is an impulsive structure to the upside. Clearly, okay, it's as clear as daylight. This is an impulsive structure. And the one thing that I have thought about is, what if that is the local high for now and it comes back down? Okay, it makes a higher low where this forms a 1, 2, and it blasts here to the upside. Okay, where you then take your trend-based fib from the low to the high to wherever that low is going to form, maybe above this massive 6-7 month consolidation area, is also in alignment with the 618. Then you're looking at $251 minimum. Because if this is going to be a 1, 2, 3 here to the upside, it can go to the 2.618, it can go to the 3. oh God, you see why I don't want to talk about these levels. It can get really punchy here to the upside, right? So Alex, I hear what you are saying. 1112 combo, okay? Maybe that could potentially explain why volume is not increasing, because if you're forming another 1-2, volume does not necessarily have to increase. Volume only increases when you're busy with a third wave. So I don't want to be the person that says we are going to create a 1112 here to the upside. Basically, okay, I mean, it would be insane, right? I think it's going to catch so many people off guard. 1 2 1 2 1 2 3, and it just rock and rolls. It just, you know, face melting price action. Hence volume is still not increasing, because you only see volume increasing when you're inside your third wave. So maybe, you know, it comes back down and volume says whoop, volume starts increasing once you're busy with your third super cycle, third wave here to the upside. Yeah, I mean, Alex, I hear what you are saying, but I okay, I trade level to level. It looks very good. Something that could potentially still play out, but I'm still expecting, looking at this structure, okay, looking at this structure over here, I'm still expecting at least one more high. Then we can start talking about bear markets. Once we have this high, then we can start talking about bear markets, because this structure, okay, does not look impulsive to the downside. It looks corrective. And even then, once we make this high and I see the same structure, I'm going to tell you guys, I still see one more high to the upside. Okay. Right, because you need to start forming impulses. In order to go down, you have to form impulses to go down. There's no other ways about it, right? If you go down in a corrective structure, it means you're still going to go up. You're just correcting to the downside. Okay, right. Let's go through some more comments over here. Sir Dewald, can we take a look? Jack, you have been asking for super for the last 3 days. Yes, I have. I have not prepared super. We can go and look at some altcoins in a moment, but you can see that I have super over here just for you, because I know you've been asking for super. And yesterday I ended the live stream because I ran out of time, and then I saw you posted the comment asking for super again. I will go and look at super before I finish today. Right. I just want to make sure that I have covered all the scenarios. Legends, I do think, looking at this structure here on the 4-hour time frame, it does look for now that the probabilities are higher to move up, maybe even come and claim this high before we claim the low. Dare I say that, right? And it's purely based on probabilities, is that we're going to move up, okay, before we claim the low. What I want to see is, well, how far can we move up? Because the one scenario that I'm still keeping in the back of my mind is when I look at this little scenario over here. Do I still have it? Ding, there we go. Okay, this is the scenario that I'm looking at. Now I need to take a fib from this high to the, normal fib retracement from the high to the low. Okay, so if you are sitting in the camp that we could go and claim $85,000 right over here, this is the structure that you're looking at, because this is the structure that will get us there. Okay, where you potentially have now formed a contracting diagonal, which is way more common than an expanding structure. And you have now formed a 1, 2, 3, 4, 5, the lowest in for now. And now we are forming a corrective structure back to the upside in an A, B, C. Okay, and unfortunately, the 50% up until the 786 over here are C wave targets. Okay, so we can go and work that out. Let's go and see if it does have confluence. So if I take a trend-based fib, from the low to the high to the low where we are right now, okay, we do have some confluence, okay? So let me just drag this ever to that side so we can see the levels properly. Right, so if this is an A, B, and the B, the low for the B is in, you know, we can still chop here, but we are going up in a C wave over here. The 1-to-1 extension together with the 0.618 is a C wave target. The 1.236 together here with the 786 is a C wave target. So if this is forming a corrective structure here to the upside that's going to reject in this zone, guess what you have? Okay, so then when you look at the structure is that you are now forming a 1, 2, 3, 4, 5. Okay. And we can go and measure that out. So let me take the scribble here out the way. I can take this trend-based fib out the way because I've already built the confidence. So there is a chance that you do not claim the high. So the probability that I'm talking about is I think we're first going to move up before we claim the low. Even if this structure plays out, I think we still need to move up higher to complete the C wave. Okay, now I can go and take a trend-based fib from the high to the low to the... Okay, now we're just playing a guessing game over here. Where are we going to reject? By the 618, by the 786. So let's just take it at the maximum target because C waves like to get aggressive to the upside. Okay, now this is where it gets interesting. Okay, so maybe the 3 dumps here up until it gets to the 618. Then you form a 4th wave and then you go down for one more low to create the 5th wave. Okay, and where does this 5th wave take you? To that $85,000 area. This area also aligns with, if I go onto the 8-hour time frame and I leave what I've done there, just leave it there for now. Okay, I can take the fibs out the way, but let's leave the target that I have over there. And I look at this structure. So there's some nice alignment with, where's my, not that one. I need to, yeah, we go. Right. If I look at this structure, okay, when I connect a fib, I need to go back onto, no, not that. I need to go back onto the regular scale. I forgot to change back to the regular scale. But when I look at this structure, I know it looks messy. I've just counted all the waves in here. Yes, I do count waves in my spare time. Call me crazy. When I connect this pivot with this pivot and I draw a trend, this trend aligns perfectly with the scenario that I've just explained, where you complete your 5th wave on the trend. So it comes back down, it bounces on the trend, it is inside the 0.382 and 50% Fibonacci, which is a 1, 2, 3, 4th wave target. 4th wave is not allowed to tap the 618, and then you go and create that one more push to the upside in a 5th wave. So if we do get the bearish case scenario, I do have confluence for a long. So all of this work just to look for a confluence level down to the downside. Yes, I know it sounds insane, right? But I mean, from a simplicity perspective, okay, if I take all the noise out the way, look at that. That's what I'm looking at basically. With, you know, taking Elliott wave theory out, Elliott wave theory just builds more confluence for me. That's why I went and I counted the waves, because you have a couple of trends running here. Okay, you have that trend, and now you have the bigger trend here as well. That one over there. So you basically have these 3 trends. Okay, so from my back testing, which I've shown inside of this structure, which I've gone through many times in that structure, I'm not going to go through it today, is that when you bounce on this steep trend for the first time, you create the 5th wave for that structure. 1, 2. When you bounce on this trend, you can create the 5th wave for this structure. When you bounce on this trend for this structure, or for this structure, now you're going to create the fifth wave for this structure. Okay, so now I'm bringing Elliott wave theory back into it. But it basically, comes back to trend lines at the end of the day, is that this structure that I've just painted out over here does have confluence with a trend. When you take a fib from the low to the high, it balances between the 382 and the 50% Fibonacci, which also makes sense that from a 1, 2, 3, 4, 5 is a fourth wave target. That's what I'm saying, legends. There's a lot, okay? There's a lot that still needs to happen over here before we can call for a bear market. We still have massive support to the downside. People calling for a bear market over here are smoking their socks. Yes, our South Pole, I do think that this could potentially be a fake out, okay? And that C wave that I've highlighted here on the smaller time frames could be the fake out. Okay, so if I go back here onto the 1 hour time frame, this could be the fake pump that you are referring to. What if this is an ABC and we fall back down and we claim the low? Definitely, that could be the fake pump. Okay, but remember, there's also a scenario. Okay, and this is why it's just a game of probabilities at the moment. And this is why I like to trade the range. Okay, there is that scenario where we are forming a bigger triangle, a bull flag, if you will. We are forming a bigger bull flag where we have formed an A, B, C, A, B, C, A, B, C, and then we break out without taking the lows. Definitely a possibility. But we don't know which structure is going to play out. At the end of the day, for me as a day trader, the easiest thing to do is to say, stuff it. From a larger time frame perspective, I don't care what's going to happen. Okay, I'm sticking here on the 15-minute, 1 hour time frame, and I am playing my point of controls, my daily levels, and my weekly levels. And depending on the reaction that I see at each level, I will make a shorting decision or a longing decision. It's as simple as that. I mean, on the 1 minute time frame, I had 3 successful trades today. Just like 30 minutes, half an hour before the live stream, I had 3 successful trades. Just want to check something here. Okay, cool. And I know some of you might have joined a little bit late, so you didn't hear me talk about these scenarios. But I basically, where are we now? Just need to, on inside of the 1 minute time frame, where can we like to be? Okay, there, right? I played this long to the upside. I played the short to the downside. I took profits over there. I explained everything in the beginning of the live stream, and I entered a long over here. So I'm trading the range. And if you, I can tell you guys now, if you cannot trade a range and you are waiting for a breakout, you are going to struggle to make money in this market. Month after month, week after week, you are going to struggle because the market ranges between 75 to 80% of the time, which means that you can only trade 30% of the time. So for 80% of the time, you're going to sit on your hands because you don't know how to trade the range. A trending market is easy to trade, and that's why everyone likes to trade a trending market. Okay, but if you can learn to trade a range, you can make significant gains. Because we don't know, okay? And from a range trading perspective or from a trend trading perspective, I don't care if we are going to $500,000 or if we are going into a bear market. I don't care, because from a day trading perspective, I short, I long, I short, I take profits. I don't care. As long as price moves up and down, I can make money, regardless of whether we're going to $500 or to $40,000. I think some people are so obsessed with Bitcoin going up or Bitcoin going into a bear market. The question is, have you made money in the last 2 days? That's the question. Have you been able to have your successful levels and trade the momentum to the downside, take profits, trade put in a long and trade the momentum to the upside, take profits? Have you been able to trade the range? Okay, or are you a type of person that just sits there and wait and wait and wait and wait and wait and wait for the bull market or for another breakout to the upside? Because I'm telling you, you can still wait for very long. Okay, this is why I had to force myself to learn to trade the range. Very important. You have to learn to trade the range. Otherwise, you're going to struggle to make money in this market. Okay. Right, I can take those two trends out the way. Let me go through some comments. Let's see, guys. Q&A. I can go and look at where are we now? 100 hour and a half. Let's spend the last half an hour on a little bit of altcoins. I do have the comments marked out. Someone asked for Link, someone asked for 𝗖𝗿𝘆𝗽, and someone asked for Super. I haven't forgotten. And right. And someone also asked, the rejection. Mr. Spaceland, you asked for the rejection. You asked for the channel. Right, let's go on to the 4-hour time frame. I want to see what channel you are talking about. Are you parallel channel? Can you draw by connecting the highs? 110, 110. Okay. So I see what you mean. You're talking about this channel. Parallel channel. Okay, you're talking about that, or you're talking about this. Okay, connecting parallel channel, you can draw it by connecting the highs 100 again, 106, yeah, 106, and lows 99, 600, 99, 99, 600. Okay, that's your parallel channel. Yeah, I must be honest, guys. I'm not really a parallel channel fan. Okay, how do you trade the parallel channel? Okay, if you were, I mean, how do, and maybe because just I'm not a channel trader. Okay, I'm not a parallel channel trader. Okay, how do you place successful trades in a channel like this? How do you trade it? I would write, because diagonal resistance and support is always secondary to horizontal resistance and support. Horizontal resistance and support are more powerful than diagonal resistance and support. So I like to use daily levels, weekly point of controls, naked point of controls. I'm not saying that you can't trade a parallel channel. It's just not my style of trading. It's as simple as that. But I do see what you mean. Okay, it's been respecting the channel quite nicely over here. It's interesting to note, but at the moment we're moving above the 50% channel mark over here. So maybe now that we're trading above, we can go back to the top of the channel. Okay, and maybe that is the rejection zone over there. A, B, C, and then we fall down and we break the channel like we've done there again, right? But I mean, I prefer to use my fib extensions and those type of things. Right, so now that I've got that out in the weight, let's look at, KDA. Is KDA breaking out? Let's see. What is KDA doing? ZIL looks good. I don't want to close that tab. ZIL looks good. I want to see what KDA is doing. I've got alarms. Guys, I've got so many alarms, right? You guys can see I have alarm paralysis over here. I've got alarms on everything. All my favorite altcoins. Okay, there's the trend. Okay, it's nibbling at the trend. It hasn't broken out. I'm going to be patient over here. Yes, I hurt you the first time. Right, so it looks like the altcoins, they want to go, right? The altcoins want to go because I'm also trying to catch this breakout before the bigger breakout. Okay, I want to build a position there, not there. But I'm waiting for the bullish sign first. I don't see the bullish sign first, so I'm going to be patient with that one. So next up, let's look at Link. Someone asked for Link. Oops. Can I see it without searching? Let's just do this. Link USDT. Here we go. Okay, 8-hour time frame. Okay, I mean, from a simplicity perspective, I have the big trend over here. Just connecting the highs, that's it. Right? From a corrective structure perspective, if I take a time fib, because I looked at Link the other day and I was like, if I take a time from the low to the high, this little low, okay, this little low was at least made after the minimum time requirement, that low. Because this is the start, that's the lowest point of the structure, okay? This low was at least made after the minimum requirement. So maybe it has a chance to find upwards momentum and break the trend and move to higher levels. It has a chance. I would prefer to see a low made inside of this zone, but you don't always get what you want as long as the minimum requirement is met. But I would like to see Link make a low between 2nd of March and the 21st of April. This is the zone where I would like to see another low. And then I'm going to say that looks way better. Way better. Because then it can break out. Because you might move up here, reject by the trend, then come down in the zone where you're supposed to make the low, and then it breaks out. Is there a chance of a successful breakout over here? I mean, there's always a possibility. You did close, or you did make the low after the minimum requirement. But I would like to see the corrective structure continue a little bit longer, especially if I take it from this low over here, because let me show you, okay? Let me show you another example. Only using time. If I take a time fib from this low to the high, okay, look at where this low was made. Also after the 0.382, but you know, more here in the middle, between the 618 and the 0.382. Okay, so one could argue maybe Link likes to make corrective structures after the 0.382 before it hits the 0.618. So does Link have a chance? Yes, of course it has a chance. Yeah, okay, so let's go do some Fibonacci pulls over here. First up is, let's do a trend-based fib from the low to the high. Okay, we did tap a nice little fib level, 618, very well respected. Okay, but I do like the 786 here above the highs. I do like the 786, which is also considered the maximum target. Can Link find upwards momentum? It did claim this order block. It did claim the liquidity below that order block. So, I mean, legends, you know, now you need to, if you want to build a position here, speculating on a breakout over here, you now need to zoom into the smaller time frames. You now need to go onto the 15-minute, 1 hour time frame and go and look at this structure, right? So let's see what is cooking here. Let's go 1 hour. Just want to see what is cooking with this structure. I mean, it already broke out, right? It already broke out, and Link needs to take this high. Okay, so if Link can take that high, it's going to reject by the trend, but at least it's forming a higher high. Because you have a low, it actually needs to claim that high. That's the most important high, but this high is at least local market structure change. It comes back for a higher low and then it tries again. So, you know, but you missed the breakout. The point being is what I wanted to highlight over here is it had the breakout. It had a beautiful retest because your stop is supposed to go below the low if you play the breakout over there. So now, you know, you've missed the breakout. That's what I'm trying to highlight. You missed the breakout. If you want to build a low leverage swing position 2x, okay, be my guest. It's not something that I would attempt over here. If you want to build a spot position, much better. If you want to build a spot position and just, you know, dollar cost average into the position, speculating on higher momentum in the future, by all means, that's a better strategy to use. But if you want to leverage trade, Link, you missed the breakout. You now need to wait for the next trading opportunity. So it depends on what you want me to do analysis on, because I can do analysis from a day trading perspective. I can do analysis from an investment perspective. And then from a swing trading perspective, I would say you kind of missed the boat already as well. From a day trading perspective, you also missed the boat. From a spot perspective, by all means, you just, you buy the dips and you are still in the dip range over here. Just remember that you can still come and tap the 786 at $13. Dips are made for dollar cost averaging. So if it moves up, it rejects by the trend and comes back down. Dips are made for buying if you're building a spot position. Right. Okay, but I mean, dare I even say, from a larger time frame perspective, Link looks sexy as hell. Okay. I can take the time fib here out the way. Switch on my scenario. I think I need to go into the weekly time frame for this. Can take these fibs out the way just to clean it up. But I mean, it could get really sexy here to the upside. I'm not sure how this altcoin season is going to play out. I don't know how the I just don't know. But I can see from a macro perspective, 1, 2, 3, 4, 5. Beautiful. I mean, and I'm talking about 2019 over here. Okay. You came back in a corrective structure. This is where we had the 2022-23 bear market. This was the bear market. That was the 2021 pump over here, right? Then we went into the bear market. We had that long consolidation phase where I believe Andy also accumulated a lot of Link. And now finally, okay, we have made a 1, 2, 3, 4, 5 in a first wave inside of your third wave. 1, 2, 3, 4, 5. You had already your corrective structure in a 2. 1, 2. And this is now building a third wave here to the upside. Dare I say $119 on Link? Dare I even mention that number? From a more realistic perspective, I would rather like to use the regular scale, not the logarithmic scale. Then you're looking at $38 to $45. Okay, let's just call it Link has a chance to at least come and claim the highs at $52. Link has a chance to come and claim the highs. That $100 Link that I've just highlighted, that is exceptionally bullish, and that's using the logarithmic targets. From a regular perspective, 1, 2, 3, 4, 5, done. Okay, the third wave can get more impulsive. It can go to the 2.618, 3.618, 4.618, who knows? The third waves can get very impulsive, but that is the conservative target for a third wave. $38. So from a spot back or investment perspective, it still makes sense for me. Please guys, no financial advice. You are in charge of your own finances. But for me, from a spot perspective, it still makes sense to accumulate over here, expecting still, that altcoin season to kick in at some point, right? Because Link is one of those altcoins that have beautiful Elliott wave structures, and it respects it so damn well. It's almost like it's setting the example for all the other altcoins. 1, 2, 3, 4, 5. Beautiful corrective structure in a second wave. Whatever is happening here looks like it's building up strength to go and at least hit $38. And even $45 is still a realistic target. Very realistic. $45. Right. Then someone asked for 𝗖𝗿. Let's go look at 𝗖𝗿. Right, legends, remember to smash up the like button over here. And, okay, Link, 𝗖𝗿, all of these beautiful altcoins can be traded on weeks. First link down in the description. You get $100 for free by linking your email and your password to secure your account. And if you do have $200 to deposit into your features account and you leave it there for 1 day, you get another $100. So, I mean, it's a great deal. What are you waiting for, right? And this deal is not going to last forever. These altcoins that I'm going through now can be traded on weeks. And these scalp trades that I took today, these aggressive scalp trades that I took inside of that teeny weeny little structure over there, I also did on weeks, because the low fees, you get 50% discount on the fees, really helps to take advantage of scalp trades. Okay, let's go and look at 𝗖𝗿. Okay, so from a simplicity perspective, let's go on to the 4-hour time frame. Okay, I'm just going to keep it simple. Legends. There was your breakout. Oh, what a beautiful breakout. It reminds me of 𝗬cie𝗂𝗿. 𝗬cie𝗂𝗿 also had a nice clean breakout, just like 𝗖𝗿 over here. Okay, currently moving up. And right, for me, I will be honest with you guys, for me to consider a swing trade, okay, well, let's first start with spot. From a spot bag perspective, great zone to accumulate. If it goes back down, great zone to add to your spot bags, right? From a swing trading perspective, what I'm going to wait for is for 𝗖𝗿 to break the major trend. I want 𝗖𝗿 to break the major trend and start consolidating outside of the trend with multiple high time frame candle closes, daily, weekly candle closes outside of the trend. This is where I will be building up a potential 2x swing position. We'll see when we get there, and if we do get that price action. Okay, and from a leverage trading perspective, if you want to day trade this from a leverage or 10x leverage or 5x leverage perspective, you've missed it. It's already broken out. It's already done the retest. It's broken out, it's retested, and now it's finding upwards momentum. So if you want to FOMO into a trade over there, right, remember that you're exposing yourself to a lot of risk from a leverage perspective, because where price is now to the lows where you are supposed to put your stop loss is a 14% stop loss. So if you're doing a 10x position over here, you will get liquidated. Your position will get liquidated when your stop loss hits. Well, your stop loss won't even hit. You'll get liquidated before your stop loss hits. Right. And now you have to wait for a new range to form, for a new breakout. Okay. And the next possible breakout is here on 𝗖𝗿. Right, so from a simplicity trading perspective, I mean, I'm keeping it simple with the trend over here. Okay, I'm not going to go and do all the Elliott waves. It's just going to take too long, legends. Right, the structure. I want to see something here. What a beautiful, what a beautiful swing failure pattern. Look at that. Claimed the lows, got acceptance back above. If you know how to trade swing failure patterns, that was the level to get into, right? Take your magnet. Where's my magnet? You snap it here onto the low. I'm not sure. Did any one of you manage to get into the swing failure pattern? You enter as you get acceptance back above, you put your stop loss below the low, and now that you're moving into profits, you could have a protected position. You don't have to stress about anything, right? You can just add a little bit to your position as price moves in your favor, because now you have a free trade here to the upside. So if anyone, because I know that there's some pro members that got into that swing failure on 𝗖𝗿, right, and they now have a protected position over here. Beautiful, beautiful. That was the long to get into. Right, that was the long that I got into AR. AR looks good. Right, you see this low? That is where I got in. Right over there. Stop below the low, and then when we started moving into profits, I protected my position. And then when AR came back down, with this retest, I added ever so slightly to my position, but it's still protected. So I don't have to stress about that potential breakout that's happening over there. I have a free trade. If I get stopped out, I get stopped out with no loss. Right, cool, legends. That is basically the analysis that I see here at, whoops, just closed my comment section. Let's see. Can you do Litecoin? No, I was sleeping when that happened. Yes, I was also sleeping when a lot of those altcoins took that dump to the downside. AR luckily provided me with a second chance to get in. Okay. I mean, yeah, I wasn't sleeping during that time because I'm paying attention to AR because I love the structure on AR. I mean, I've done some deep technical analysis on my previous live streams on AR. You should all know why I am incredibly bullish on AR, even if it still makes another low. I am incredibly bullish on AR, not just because of the fundamentals, but the technicals looks absolutely insane. Okay, no financial advice, of course. AR can also be traded on Weeks and on Bluffin. Links down in the description. Okay, what else? I closed my comments. Okay, there we go. It's back up. Right, let me scroll here to the bottom. Like YouTube, AR targets. AR targets? Did you like some AR targets? I will go through that in a moment. BTC, I mean, I've gone through all the technical analysis here on BTC. It's pumping. What can I say, right? It's pumping here to the upside. I think if we continue to pump here to the upside, the closest level that we have to the upside where we have to pay attention, okay, is when you take a fib from the high to the low, and when I take a trend-based fib from AB, okay, from the low to the high. Okay, here we go. I'm going to show you guys now which are the most important levels you need to pay attention to where we can reject. Am I on the wrong scale over here? Something doesn't look right. A, B, C. I mean, it could get punchy here to the upside, but A, B, C. Let's do this. Sorry, I'm taking from the A, B. There we go. Make this a little bit longer. Okay, so to the upside, first point of order, I would say the highest confluence zone that I see here to the upside is the 0.618 because it has confluence with the 1-to-1 extension. Okay, this is the zone that we need to pay attention to, and maybe we will even get there tonight before the market closes. This is, I think, the highest zone that we need to pay attention to because this could be a 1, 2, 3, 4, 5. This is an A, B, C here to the upside, and that is a very common C wave corrective structure. Because if this is forming an 1, 2, 3, 4, 5, A, B, C here to the upside, you can go and take all of these lows again. So that's the zone that we need to pay attention to if momentum continues here to the upside. Right, so basically $99,000, 210. Let's pay attention to that level. That is the closest level that I see here with high confluence to the upside, okay, for potential rejection. Yes, price can continue to the upside. I'm just trying to find the closest level to the upside that has the greatest amount of probability of rejecting. There's a 0.88 tap over there. When you take a fib from the high to the low, okay, there's a 0.88 tap over there, which increases the probabilities of coming to claim the highs. So I think if momentum is going to continue here to the upside, right, this is the zone that we need to pay attention to because this could be an epic short that falls down. It could. But I will definitely take profits on the way. I mean, even if this is a successful rejection, if price had to move up here and it rejects it successfully, as soon as you start hitting support, okay, above these highs, I'm already taking profits over there. Already I'm taking some profits. Maybe I'll take 50, 40% profits. It makes a lower high. Maybe there's some bearish CVD. I could add a little bit back into my position because then I know 1, 2, 3, 4, 5. It could form a 5-wave structure here to the downside. There's more support. That's where I'll take profits again. That's just what I do as a day trader. I pay myself. Okay, that's what I do. Right, so that is what I see here on BTC. So, sir, please quick review with. It is my humble request, sir. With. Right. algo breaking out. What do you think of virtual? Dewald, if FIB level has been taken, do you invalidate it? I'm not sure what you mean. So if I see the following, like there, right? That's a swing failure pattern from the 0.618. And the reason I will take a trade like that often is because if I use a FIB level for a swing failure pattern, okay, look at how incredible your risk management is. And you have to be sniper. You have to be quick. You can't second guess yourself. Okay, you can't get late into the entry because then you're exposing yourself to too much risk. But if I see that, where price comes back up and it falls down, I sniper that thing like a damn sniper, and I have my stop loss above the high. As soon as price starts falling down, I protect my position. I move my stop loss to break even, and I start taking profits when you start hitting support. You've just hit support over there. So you can sniper these little Fibonacci levels, definitely. The only way that it will get invalidated is if price now punches through and it starts closing candles above. Then okay, now I don't look at this FIB level anymore. And then maybe it does the same thing at the 786. Okay, sniper that damn thing, moves back down, it hits support, I take profits or close my position. You know, so you can scalp the crap out of FIB levels if you exercise good risk management and you think quick on your feet. You can't second guess yourself, and it does come with experience. Okay, because sometimes people second guess. They're on the 1 minute time frame, they see that price action, and by the time price has fallen, then they enter with the stop above the high. But now you're exposing yourself to so much risk, and you're already hitting support. Okay, you weren't quick enough. Right. Guys, I do know that there's a lot of altcoin requests over here. Dewald, Leia, cooked. I know Leia I still have Leia in my spot bag, like on YouTube. I still have Leia. I'm just holding on. I haven't cashed it out. Just holding on. I know that it's going to recover. I just have to hold through the bad time. Okay. And I do know that at some point when altcoin season kicks in, and if altcoin season kicks in, a raising tide raises all ships. So I do know that any altcoin that I currently have that is underwater will potentially recover, because when you have a proper altcoin season, even the stupidest of stupid altcoin pumps. Everything pumps. Okay, so if I have a good quality fundamental altcoin like Layer AI, I know for a fact that it's also going to pump. And because it has good fundamentals, in my opinion, right, it most probably will pump more aggressively than some of the shit coins out there. Right, so yes, I know you've asked for WIF. But I have unfortunately run out of time. It's Friday evening. I want to go spend some time with family as well, get something to eat. And legends, remember, all of these tokens that you guys are asking for here can be traded on weeks. First link down in the description, where you get $100 for free just by linking a security method to secure your account. And you get another $100 by depositing $200 into your features account. You don't even have to trade with it. Okay, but you have to leave it there for 24 hours. Right, legends. I wish you all a great weekend. Sorry I didn't get to all the altcoin requests. I do apologize. There's just, I have run out of time. I've been here for 2 hours. And I will see you guys in the next one. Cheers for now.